Well, the late 90s were fairly quiet, to be honest, in our area. And we were still at a phase when there weren't any private businesses to invest in. We actually created a couple of private businesses. In China, we also joint ventured with state-owned enterprises, which was not a great lucrative way to proceed. So it was actually a tough time. Things just started bubbling again around the late 90s, I think, where we started to see people coming in, replicating U.S. business models in China for the first time. And that's where, I met first Xiao Yibo, who started EachNet, who came to see us, I think it was like 99 or 2000. And I'd been living in Shanghai. And so it was a revelation to me what was going on in terms of eBay. I didn't really know about eBay. I lived in China where we were battling it out with Sino-foreign equity joint ventures, principal form of investment. So the activity outside of any kind of collaboration with state enterprises was fairly new. But once that took off, all kinds of things started happening.
So when I first got started in venture capital, it was because of a relationship I had in Japan. In the late 1980s, I met Masayoshi Son from SoftBank, and we became friends. Then in 1995, when he was setting up SoftBank's operations in the US in a more formal way, he had the idea of running a venture capital firm. So we played a round of golf, and after the round of golf, I went to his room, and his room was filled with spreadsheets on his 100-year plan for SoftBank, and part of that plan was a venture capital fund. So during the course of that discussion, he asked me if I was interested in running that, and November 1995 is when I became a venture capitalist. So in '99, I came to China and helped Chauncey Hsieh set up SoftBank China Venture Capital, and that was SoftBank's corporate money. That it wasn't a fund; it was just money from SoftBank corporate that Chauncey was deploying. Then in 2000, right around the time that the crash was happening, so I had created a joint venture for Cisco Japan when I was at Cisco. Now I'm on the SoftBank side. So Cisco bought SoftBank out of its position in the joint venture. Part of that buyout was a commitment of $650 million to a fund called the SoftBank Asia Infrastructure Fund, or SAFE Partners. So for the first year I ran SAFE and hired Andy Yan in 2001 to come in and run that on a formal basis. So that was right at the beginning of what I'd call the institutionalization of venture capital in China.
The first fund was 100 million, and the old asset we managed at the CICC and turned over. Some investors decided to take their investment not to roll over. The one that we roll over is about 65 million, so we got about 165 million AUM to begin with. Their institutional backing, primarily for institutional investors at the beginning, and GIC was the one behind it, and the GIC have a strategic view. Probably that was one of the reasons they get into CICC to begin with. So they were continuing to supporting us to help us to swing off as an anchor investor for our fund and the small shareholder of the general partner. And then Capital Z, which was the Zurich insurance sponsored business fund of funds. So they were there. Up Invest was early investor when we were at the CICC, and so they were very happy with the early investment with us. They were anchoring our fund, and IFC being a financial, development institution, and seeing that emerging China private equity market, and they were early supporter. At the beginning, we were at the right time for private business in China. They were at an early stage, but they have on a very fast growth track. This is particularly true in the consumer brand related business. So if you look at our early investment, Mengniu, Li-Ning, Focus Media, and later on Xuanhui, Bai Li, and there are 15, 20 of them. Later on, when we invested, they were small and valued at a few $100 million, maybe less $1 billion valuation. Now they are all multi-billion-dollar businesses. We continue to evolve in their growth in several rounds later round of investment. Now some of them are big enough to get into global M&A, that's later. The current, if you look for the first 5 years, is primarily financing their growth and help them into a structure so they can list it in international stock exchange in Hong Kong or in US.
We helped launch Fengbo at the fund Seiyuan. He and his brother had done New Margin with Eric Neil Lee before. And then in 2005 is when I moved to China, because that's when it became quite obvious that the institutionalization was going to occur, and the opportunity China represented was roughly the equivalent of what the US represented. And it was the first time there was another market where you could legitimately look and say, not just in one sector, but across very many sectors, the China market would be roughly the equivalent of the US for venture capital. I would say that two things happened. One was when some of the major US firms came into the market. So you had NEA combining with Greylock to do Northern Light. You had Sequoia hiring Neil Shin. Andy had grown the SAFE platform into something. IDG had started to expand. And you had a couple IPOs. So you had Tencent in the market, even though the market cap was relatively low. You had Baidu in the market. Sina had gone public. Alibaba had not, but the Taobao launch had drawn everyone's attention into what was happening with the potential electronic commerce in China. And people started to realize that China was going to bypass fixed line infrastructure and the entire country was going to be built on mobile. So that was the first wave. And that's when you also had the Princetons, some of the other major institutional investors come to China in a meaningful way in 2005, 2006. 2007 and 8, it was more just the basic building blocks of the industry and the infrastructure. Then in 2009 and 10, the RMB funds started to launch. So that created a domestic pool of capital because the listing requirements had been relaxed for quite a few companies. And you had the second board, you had the Shenzhen board, you had the China Exchange. So you suddenly had liquidity within domestic currency. So coming out of that, the 2010-11 timeframe is where you really had an explosion of China's venture capital industry really moving onto the world stage at a large scale. To the extent now, China does as much in a quarter as Europe does in a year.
Well, we certainly didn't think that could grow this big 15 years ago. I think Jiaozhen and I was talking when we first spin off. We were talking about our ultimate size was 1 billion. That was the dream or the plan then. We were surprised or very happily see that China private equity has grown so big. I think there are reasons if we look at it, backward today. China primarily funded their economic growth by debt, indirect financing. There was lack of equity financing in various of the business growth. This is particularly true for private businesses because the bank like state-owned enterprise because that's safer. And the capital market developed in China has been constrained with various things. The IPO wasn't really completely market-based, so they're on and off. So that was it's not very reliable. So there's a need for equity. If IPO market doesn't provide sufficient equity, the private equity come in to fill the gap.
We stayed out of China for quite a few years because, again, asset prices outside of China were cheaper than in China. And then, after 2000, we went back to China market. China has come a long way because at that time, there were not many big deals, not many buyout deals. But now China market, I feel, has much more matured.